Good morning, everyone. Welcome to the Daily Commodities and Currencies podcast. This is Manish Sharma, joining in as fundamental research analyst, and will be sharing you the key events which happened yesterday, as well as the key triggers for today. So let's start. Starting with the precious metals, what we saw was gold price traded in a positive territory and recovered to about $5,000 per ounce levels in early trade today, where we saw that precious metals have extended the rebound after a very historic and volatile session which was seen in the last week. Silver also bounced back to almost $90 per ounce levels in the spot markets. But the sell off was seen in the last week also based on the heavy profit booking as well as the sell off which was seen on fears that the US president might nominate Kevin Warsh as the next Fed chairman, which was seen as a very hawkish move. Traders also await the next round of US economic signals, where broader demand for safe haven assets still persists amid a recovery seen in the yesterday's session. CNBC also reported that US military had shot down an Iranian drone that aggressively approached the US aircraft in the Arabian Sea. Also, we have seen that Ukraine has escalated its strikes against Russia yesterday, where geopolitical tensions have now been escalated and remains a key trigger for the recovery in the gold and silver prices in yesterday's session. What we saw is the supports for gold, what we can see is persist at around 1,48,700 levels on the downside, and a very strong resistance persists for the gold prices at around 1,59,250, a close above which only the further upside is expected. For silver, strong supports persist at around 2,58,500, while resistance on the higher side persists at around 2,92,000. The close about that only needs to be triggered for further upside in the prices. Overall, gold and silver seems to be supported in the near term, where the geopolitical tensions would be closely monitored, as well as volatility may persist at higher levels because prices might look ahead towards cues from the macro front in the US, as well as expectations of imminent rate cuts till June have been delayed, while the release of non-farm payroll numbers, which were scheduled on Friday, has also been delayed. So the uncertainty persisting could support the prices in the near term. Now let's talk about another complex, that is the base metals complex, where we saw that copper prices have rebounded yesterday as the metal sell-off, which was led by silver and gold, had eased yesterday. State Bank Industry Group China had called for boosting its strategic reserves of the crucial industrial metal. China should expand the size of its reserves and also work with major state-owned producers to increase the commercial stockpiles now. According to the China Non-Ferrous Metals Industry Association, now which had held its annual briefing to review trends in the sector. Prices have risen as much as 5% to $13,526 a ton on the London Metal Exchange, following an 11% plunge which was seen from the record highs last week. And other base metals have also climbed on the LME, while gold and silvers have rallied sharply. So the outlook for LME copper remains positive, signaling comfortable moves where the LME copper remains in the contango, while cash prices remains at a discount to 3 months complex. Overall, the fading COMEX premium has reduced arbitrage-driven flows to the US, and sentiments is also supported by state-backed China's industry group calling for a boost in the strategic copper reserves. Overall, prices are expected to stay supported, but downside is limited near 12,600 per ton levels, and upside is seen at around 13,300 per ton levels on the LME. Talking about the energy complex, what we saw is crude oil prices have climbed up almost 2% yesterday, where fresh tensions between US and Iran and fears of supply disruptions persisted. US military had shot down an Iranian drone, while what we have seen is prices were also supported on signs of tighter supply and demand optimism, where US crude stockpiles have also been reportedly falling last week, indicating stronger demand. Crude oil outlook remains bullish in the near terms as strong rising US-Iran tensions and sharp US inventory draws could keep the supply risk in focus. WTI may move towards $65 to $66, with immediate support at around 61.5 to $62 per barrel range, while further geopolitical escalations or confirmation of inventory declines could push the prices higher and could easing tensions may trigger the profit booking, but downside seems limited as of now. Now, talking about the currency, Indian rupee has strengthened to almost 90.3 levels yesterday, rebounding from a record low of 92 touched on the 28th of January. Because of the optimism that India US is has agreed on a deal to lower their tariff rate, where US President has announced that the deal would cut tariffs on the Indian goods to 18% from 50%, which was there earlier. Also, US has removed an extra 25% duty, which was imposed earlier last year in response to Indian Russian oil purchases, while the US President expects that overall the Indian government could stop purchasing the Russian oil now. The moves were set to improve the export outlook also, where Indian textiles, machinery, and raw material are commonly shipped to the US, taming the imbalance in the forex flows to the India, and that has pressured the currencies in the recent quarter. The rupee has reached a record low last week as rebound in oil prices and increased domestic dollar demand for major energy importers have weighed on the currency. The currency's lows were also magnified by record-setting INR 17.2 trillion in borrowing, which was spent by the government in the new federal budget. So overall, the sentiments for rupee remain slightly on the positive side only. However, the RBI interventions needs to be monitored closely in the coming days, while dollar movements on the global side is also needs to be monitored closely for a further direction in the rupee front. As far as the macroeconomic data are concerned, we have seen that non-farm payrolls released this Friday would be delayed because of the partial shutdown concerns, but that has been eased right now. Overall, we can see that US IDP employment change data would be released today, and US crude oil inventories are also due in the later half of the day, where overall global US services PMI figures would also be released that would throw some light on the state of the economic conditions in the US. So that's all about our podcast for the today. I think you have gone through that, and we wish you a very successful trading day ahead. Thank you very much.